watching my stream yesterday, you'll know that I made a plan and I left it like that. So my plan was to either short or long, and my entry was going to be the swing failure of either this high here, and I marked this as swing failure, but basically it was the previous high. So if you look back, I had this previous high marked, and basically what I was looking for was for the price to find support off that level, and kind of like a swing failure, but not the same thing, because you're not taking liquidity in the sense of liquidating longs, but it is the same idea. And when I saw the price go down yesterday, didn't take the trade. I just waited, saw the price down in these lows. Now this is weakness. For the price to be down here and to lose this key level is weakness. So you can't long weakness. You can't buy weakness. You have to wait. And when you have weakness, it's easy to see then strength. And the weakness was losing that level, this SFP line that I've marked, which is actually a previous high. That's weakness, yeah. Strength was reclaiming that same level. So basically last night, yesterday evening, what weakness was followed by strength. As soon as we had strength, I had an invalidation. That's the key with trading. You need an invalidation. Now, what was the invalidation? Well, I didn't mark this lines yesterday evening. I marked it yesterday morning, so I already had an idea of what I was looking for. I already had that idea, so I kind of knew what I was thinking about, and I knew where I wanted my invalidation. Now, when I took the trade, I entered twice. I didn't go fully in. I just went half and then half. Good morning, Dan. How are you? And I had a hard invalidation lower down. So it's really important in trading that you have a hard invalidation. So I'll set my hard market sell there, but I have a mental invalidation of this line. So if I start seeing the price come above this line that I had in mind and then start losing this line, then I'll just exit manually. I won't allow the market to exit me, and I'll have my hard invalidation lower down just in case you get a crazy event like a black swan type event that you have to have that kind of invalidation. It's obviously a lot wider than what I'm prepared to risk, but it's better to lose a larger amount than all your amount. So when you're taking trades, it's always good to have like a hard stop, which is always going to be more than the amount that you want to risk. But the idea of the trade is only to risk a maximum of the 1%. So the kind of trading that I'm talking about is proper trading, where you're only risking 1% of your account and it's always compounding. So if you're losing trades, you're losing less each time, and if you're winning trades, you're winning more each time. That's the correct way to do it. And so I had this planned out yesterday, and if you watched the stream yesterday morning, you saw that I planned it out. I took the trades. So I entered basically on the sign of strength. For me, a sign of strength was 2 30-minute closes above this level. That's, in my mind, that's called acceptance. And so when you get that, I took a long, and then I also set a limit order on this line. So if the price came back down, I'll get a better position. And I had a invalidation of the price closing back underneath this SFP line. And I drew this line yesterday, this yellow line yesterday, and it's amazing how it worked. So, you know, I didn't predict the future yesterday. I just had an idea of what the price needed to do. And when I saw the price was doing what it needed to do, I took the trade. It's really that simple. Yeah, because the price can only do one of a few things at certain places, and once you know what you're looking for, it's basically history always repeating itself, and you just have to take the trade. It's hard for people to take the trade if they're not willing to risk their 1%, their percentage. And yesterday what happened was I took the trade, I took my profit as the price came up, and my profit was my 1%. So you take your 1%. I set my trade to break even, and I'm in a long right now. I'm in a runner basically. And so there are different ways that people advocate taking profit. I advocate just take your 1%, let a runner, move to the next trade. I think when you can analyze the charts and when you can find trades, it doesn't really matter. Just take your profit and enjoy life. That's what I think. Different people have different ideas of how to take profit, and I think it works different ways. Methods work differently for different people. So here's my trade. Hold on. So yeah, so I entered here. I posted on Twitter. That was my first take profit. So 495.20, 49158 was my average price. And when you look at the charts, basically in this little cluster here, and as it came up, I took my profit, and that was my 1%. And now that the price has come up, I skimmed a little bit this morning, but I'm basically in a runner trade. And just to go back over what I was looking for, just so that you understand the idea, I had this previous high marked out. I didn't trade it as the price went into the line, into the level, because you can clearly see that there's no reaction. You see the price is going through that level, there's no reaction. Okay. But as the price came back up to reclaim the level, the reclaiming of that level was the entry, was the trigger. Yeah, because if the price was to continue for a down move or for weakness, if the weakness was to continue, then there's no way the price should have come above that level. It should have rejected to go down. Yeah, so that would have been a key level for shorts to enter. If we were expecting a continuation of this down move, but they didn't enter, and actually what was happening probably were shorts were closing, and so maybe there were some people shorting from this little range here. And yesterday on XO we looked and we saw that there was a little bit of bearish CVD divergence. I didn't take the short because I didn't have an entry, but if you look at the way the price moved after we did our live stream yesterday morning, basically anyone could have entered market short as you lost the value area low, and you could have had your invalidation here. It was possible, but again, when you're taking trades like this, you have to take your profit. And I think what people don't understand is that traders love to take profit, and usually when they take profit at market, and that pulls the price back up. And so what you've got here is you've got a combination of shorts taking profit, you've got a combination of shorts entering late. And what happens is when you have shorts entering late and the price comes back above their position, they have to close their position at market, so you end up with higher market longs. All right, Ali Warchild is asking, good time to short? Definitely not. Don't short. Not a good time. You don't short into strength. That's just the rule. If you see strength, don't short. You only short weakness. That's literally the rule. You when you see strength, you don't short. When you see weakness, you don't long. It's just a hard written rule. And basically what you want to actually do is when you see strength, you want to long. And when you see weakness, you want to short. Yeah, but you need an entry. So that's the rule. And then Zach is saying, and you have a red vector candle, it got recovered. What's a red vector candle? I'd like to see that. What is a red